right now, the infinite magical AI cloud we've all been promised is, well, it's slamming into a very physical, very expensive brick wall.
Yeah, a massive one.
Right. Because for years, the tech industry has kind of sold us this idea that the digital world is completely weightless. You pull out your phone, ask a question, and the answer just materializes out of the ether.
Like magic.
Exactly, like magic. But the reality playing out behind the scenes is this massive, almost brutal irony. The biggest tech giants on Earth, the very companies that built that magical cloud, are discovering that artificial intelligence is, well, it's heavy.
It is incredibly heavy.
It requires unprecedented amounts of physical space, electricity, and, cold, hard silicon.
And that physical reality is just totally tearing up the blueprints of almost every major tech strategy we've seen over the last decade.
Which is exactly our mission for this deep dive. We're taking a stack of recent reports from, cutting-edge tech journalism covering these desperate corporate partnerships to a heavily detailed financial analysis by the Henry Fund.
Right. Really dense stuff.
Very dense. But we're using it to reveal the hidden compute crunch that is actively choking the AI revolution. We're going to look at how this physical bottleneck is forcing companies like Apple, Google, and Meta into these massive strategic pivots.
It's a total scramble right now.
It really is.
Right.
Okay, let's unpack this, because obviously computers have always needed power, right? So where exactly is this new physical brick wall coming from?
Well, the bottleneck really comes down to the difference between teaching an AI and talking to an AI.
Okay, break that down.
So most of the early headlines focused on the training phase. That's when a company feeds billions of documents into a massive supercomputer to, teach the AI how to recognize patterns and understand language.
Right, which takes a ton of power.
It takes a monumental amount of power, yeah.
Yeah.
But it is a discrete event. You do it, and eventually the model is trained. The brick wall we are hitting today is a phase called inference.
Inference is the actual deployment, right?
Right.
Like that's the act of the AI generating a response for the user in real time.
Yes, and structurally, inference is just a nightmare for physical infrastructure.
It never stops.
Exactly. Every single time you ask an AI to draft an email, analyze a spreadsheet, or generate an image, it requires intense processing power on a server somewhere in the world to calculate that specific answer.
Right.
Now imagine integrating that into every web search, every customer service chat, every software application on the planet. The global demand for inference is surging so violently that the physical world, the actual server farms, the cooling systems, the power grids, they simply cannot keep up with the software.
Wow. And, this physical chokehold is exactly why we are seeing such bizarre behavior from a company that is usually synonymous with perfect self-reliant hardware. Apple.
Right. Apple.
For the last 10 years, Apple has built this airtight reputation for their custom in-house silicon, right?
Yep.
The chips in your Mac and your iPhone are untouchable.
Industry leading, yeah.
But suddenly, we're reading these reports from The Information that Apple is out there panic shopping for AI chip startups, and they're outsourcing server space.
It's a remarkable vulnerability for them because Apple's M-series chips, like the M2 Ultra, they are absolute engineering marvels for consumer devices.
Totally.
But when Apple tried to run Google's massive Gemini models on internal servers powered by their own M2 Ultra processors, specifically to run the heavy lifting for their newly upgraded Siri, the servers just choked.
Wait, really?
Yeah, the hardware just couldn't handle the inference load.
I want to stop you right there because to a lot of people, a fast chip is a fast chip. Why would an M2 Ultra, which can render 4K video flawlessly, suddenly fail at running a text chatbot?
It's a completely different kind of math.
Right. I like to think of Apple's M2 chip like a Ferrari. It is incredible at getting one specific task from 0 to 60 in seconds while using very little fuel.
That's a good way to look at it.
But cloud AI inference requires a freight train. It doesn't need to go fast in a straight line. It needs to haul 10,000 heavy shipping containers at the exact same time.
Yeah.
Apple essentially tried to hook a freight train up to a Ferrari.
What's fascinating here is the architectural difference you're pointing out. It really comes down to memory bandwidth and concurrent processing.
Okay.
Like an M2 Ultra is designed for sequential processing on a personal device, but a cloud AI chip, like an NVIDIA GPU, is designed for massive concurrent workloads.
Doing everything all at once.
Right. It processes thousands of complex data streams simultaneously, and to do that, it draws massive amounts of electricity and generates insane heat. You simply cannot stick a bunch of highly efficient laptop chips into a server rack and expect them to power global AI inference.
Which is wild.
Yeah.
And because they hit that wall, Apple has been forced to outsource this heavy lifting to NVIDIA GPUs hosted on Google Cloud. Just think about the optics of that. To me, that is like a Michelin star chef having to secretly order Uber Eats to feed a VIP dining room because they didn't realize their own stove wasn't big enough for the menu.
That is exactly what it's like, and the executive team at Apple is likely acutely aware of how bad that looks.
Oh, definitely.
Because beyond just the bruised ego, relying on Google Cloud exposes a rare vulnerability in Apple's entire brand identity.
Their privacy pitch.
Exactly. Their pitch to you has always been privacy. You know, what happens on your iPhone stays on your iPhone, or at least on our highly secure proprietary Apple servers.
Right, not Google servers.
Right. If Siri's brain requires sending your personal data out into Google's cloud infrastructure, it forces Apple to compromise on the very independence they've championed for years.
And it doesn't look like they have a quick internal fix either. I mean, their custom server processor, which was codenamed Baltra, it totally missed its release window.
Missed it completely.
The reports indicate a true successor. Maybe.
Yeah.
Like an M7 Ultra, designed specifically for these server workloads, might not be ready until 2029.
And in the AI race, 2029 is a different century.
It really is.
Which explains the desperate scramble for stopgaps. I mean, they are currently swapping in newer M5 Ultra chips as a temporary advantage, but more importantly, they are breaking their usual rule of avoiding massive corporate acquisitions.
Oh, right, the startups.
Yeah. They just bought an Israeli AI audio startup called Q.AI for nearly $2 billion.
Wow.
And they are deep in talks with a company called Prism ML. PrismL specializes in something crucial right now, which is shrinking large AI models so they require less physical compute.
Okay, wait, how does that actually work mechanically? How do you shrink an AI without, breaking it?
It relies on a process called quantization.
Quantization, okay.
Yeah, so if you think about an AI model as a massive mathematical formula, it usually calculates answers using incredibly precise numbers, like a decimal point followed by 16 digits.
Super precise.
Right. Quantization essentially rounds those numbers down. It drops the deep decimal points.
Oh, I see, like compressing a photo file?
Precisely. It's very similar to compressing a massive raw photo file into a smaller JPEG. You lose some of the absolute microscopic data, but the image still looks identical to the human eye, and it takes up a fraction of the storage space.
That makes total sense.
So Apple is hoping PrismL can shrink these AI models enough that their internal servers can finally run them without catching fire.
But until they figure that out, Apple is running to Google Cloud for help, which, triggers a massive domino effect.
Oh, absolutely.
If Apple is knocking on Google's door demanding compute power, what happens to everyone else who's relying on Google?
Well, the physical limitations of the cloud become painfully obvious for the rest of the industry. Google operates one of the largest cloud networks on Earth, but there is a finite limit to the electricity and silicon they have plugged in at any given moment.
And we actually saw this happen. According to the Financial Times, around March, Google actually had to impose strict limits on Meta's use of its Gemini AI models.
Yeah, that was huge news in the industry.
Because Mark Zuckerberg's company requested more computing power than Google could physically provide, Google literally had to tell one of the biggest tech giants in the world, no, we don't have the room for you.
That is a devastating blow for Meta's operational pipeline.
I bet.
Because unlike Microsoft, Amazon, or Google, Meta does not own a native public cloud business.
Right, they just have social media.
Exactly. So if Meta needs to expand their server capacity, they have to either build their own data centers from scratch, which takes years, or rent space from their direct competitors.
And a listener might wonder, what is Meta even doing with all this AI power? They aren't just generating those funny AI pictures for Instagram feeds, right?
Out at all.
The sources show Meta is heavily relying on Gemini for critical under-the-hood security.
Yep, the back-end stuff.
They use it for real-time fraud detection and automatically scanning and removing malicious content across billions of posts. They use it for customer support chatbots, even for internal code writing.
It's entirely baked into their daily operations.
And the shortage got so severe that Meta management literally had to mandate that their own software engineers be more efficient with their AI tokens.
Let's break down what that actually means, because token rationing is becoming a very real part of corporate life.
Yeah, please do.
A token is basically a piece of a word that an AI processes. When management tells engineers to use fewer tokens, they are demanding that the staff write tighter code, ask the AI shorter questions, or just redesign their internal tools so they make fewer API calls to the server.
That's great.
They are rationing compute power, like an office manager rationing printer ink.
It's just wild to think about at that scale. And, the desperation to find more compute leads to a detail in these reports that completely blew my mind.
The SpaceX thing.
Yes. Early this June, Google signed a $920 million a month agreement to lease computing power from Elon Musk's SpaceX.
A month. Yeah.
I mean, I have to push on this. If Google, one of the foundational architects of the modern internet, has to rent computing power from a space exploration company just to keep the lights on, are we looking at a scenario where the entire internet starts buffering because AI is hogging all the servers?
It sounds like a sci-fi dystopia, I know.
Yeah.
But it makes perfect logistical sense when you look at the physical mechanics of power grids.
Okay, how?
Google didn't go to SpaceX for their rockets, they went for Starlink.
The satellites.
Right. A massive AI data center requires gigawatts of electricity. You can't just plug that into the grid in a populated area like San Francisco or Virginia without causing rolling blackouts.
Because it just draws too much power.
Way too much. You have to build these data centers in the middle of nowhere near a massive hydroelectric dam or a nuclear plant where power is cheap and abundant.
Okay, that makes sense.
The problem is, the middle of nowhere doesn't have the fiber optic cables needed to connect those servers back to the internet backbone.
Oh. So SpaceX bridges the gap.
Exactly. Starlink allows Google to drop a server farm in a remote desert, power it locally, and beam the data back to civilization.
That is just wild. It's like a geographical power arbitrage.
It is.
But solving this physical shortage requires an unimaginable amount of money.
If we connect this to the bigger picture, we are witnessing a capex Cold War.
CapEx being capital expenditures.
Right, the money a company spends to acquire, upgrade, and maintain physical assets. In the tech world right now, capex basically translates to buying land, pouring millions of tons of concrete, securing massive water rights for cooling systems, and hoarding every single NVIDIA chip that rolls off the assembly line.
And the numbers in the Henry Fund report, they literally look like the GDP of small nations.
We really do.
Alphabet raised its CapEx forecast to somewhere between $92 and $93 billion.
Billion with a B.
Yeah. Amazon is planning $125 billion for 2025. Microsoft's spent nearly $35 billion in just one single quarter.
It's unprecedented.
Meta is targeting $71 billion and committed to investing $600 billion in the U.S. by 2028. Like, everyone is emptying their bank accounts to build physical infrastructure. Everyone, that is, except Apple.
Yeah, Apple is the glaring outlier in that financial report.
They only spent $12.7 billion on CapEx in fiscal 2025.
Less than a tenth of what Amazon is spending.
Which is insane.
Apple is executing what the industry calls a capital-light strategy. They are deliberately avoiding this massive data center arms race.
And the Henry Fund absolutely punished them for it. I mean, their report slapped a sell rating on Apple stock, dropping a $205 price target on it.
Right.
Which, represents a massive 24.1% downside from its current $270 price. I know analysts downgrade stocks all the time, but telling investors to aggressively sell Apple feels like financial heresy.
It does. But the Henry Fund's thesis is entirely based on the physical realities we've been discussing.
You're right.
They argue that Apple's lack of massive AI infrastructure will structurally constrain their ability to innovate.
Because they can't run the models.
Exactly. The market is currently rewarding the companies that are laying the foundational concrete of the AI era. Because Apple relies on Google for cloud inference and is just painfully slow to build their own gigawatt data centers, the analysts believe Apple's valuation is artificially inflated by their past hardware successes.
Not their future capabilities.
Right. They view Apple as fundamentally trailing behind Microsoft and Google.
Here's where it gets really interesting, though.
Yeah.
I look at this, and I have to wonder, is Apple actually playing brilliant 4D chess?
How do you mean?
Look at the history of the tech industry. The first mover almost always takes the arrows. Google, Meta, and Microsoft, they're burning hundreds of billions of dollars fighting over zoning laws, laying concrete, and paying astronomical electricity bills. What if Apple is just deliberately letting them make all the expensive mistakes? Apple waits it out, lets the AI bubble settle, finds out which models actually work, and then seamlessly integrates the winning software into the 2 billion active devices we already have in our pockets.
Hmm.
Letting your competitors build the expensive roads so you can drive your high-margin sports car on them seems like the ultimate power move.
That is a very strong counter-argument, and it honestly aligns perfectly with Apple's historical playbook.
Right. They let others figure it out first.
Exactly. They rarely invent a new product category. They let others struggle with MP3 players or smartwatches, and then Apple swoops in and perfects the consumer experience.
Exactly.
By keeping capex low, they insulate themselves if the AI hype train derails.
Hmm.
However, the market cap tells a different story about who holds the leverage right now. NVIDIA currently has a market capitalization of $4.6 trillion.
Yeah.
Apple is sitting at $4.0 trillion.
Wow. NVIDIA actually passed them. The chip maker passed the iPhone maker.
Because NVIDIA controls the physical choke point, Apple's capital-light strategy only works if AI ends up just being another cool feature on a smartphone, like a better camera.
Right.
But if AI fundamentally shifts how computing works, if the massive models running in the cloud become more important than the physical processor in your hand, then whoever owns the data center owns the user. Apple is betting that the device remains the center of your digital life. The Henry Fund is betting the cloud takes over.
So what does this all mean for the person listening to this right now? Let's pivot away from trillion-dollar market caps and talk about the actual device sitting on the desk in front of you.
The consumer reality.
Yeah, because the Henry Fund report paints a remarkably grim picture of Apple's consumer hardware future.
It really does. The report forecasts that iPhone revenue will grow at a compound annual growth rate, or CAGR, of just 2.4% through 2030.
Ouch.
Yeah, in the tech world, a 2.4% growth rate on your flagship product essentially means you have flatlined.
The physical hardware innovation has clearly slowed down, and consumer behavior reflects that. People are holding on to their phones for 3, 4, even 5 years now.
Easily.
And the report specifically noted that demand for the newly announced iPhone Air model is remarkably weak.
Yeah.
Apple actually had to slash their production orders because consumers aren't buying the hype.
No, people want utility. They want longer battery life, durability, a better camera lens.
Exactly. They don't want to drop $1,000 just to get a phone that is like 2 millimeters thinner.
Right. The era of the automatic 12-month upgrade cycle is over. But if the physical iPhone isn't driving massive new revenue growth, how is Apple maintaining its profit margins?
That's the billion-dollar question.
Well, the answer is their digital ecosystem. Services.
Services are entirely keeping the ship afloat. We're talking about the App Store, Apple TV Plus, Apple Pay, Apple Music, iCloud storage subscriptions.
All of it.
The Henry Fund forecasts that services will grow at a massive 13.3% CAGR, projected to reach over $200 billion by 2030.
And here is the kicker. Services have a gross profit margin of over 70%.
Wow.
Yeah. It is vastly more profitable for Apple to sell you a digital monthly subscription than it is to manufacture, box, and ship a physical piece of glass and aluminum across the ocean.
Especially when the physical world is throwing up massive geopolitical roadblocks to that manufacturing.
Oh, absolutely.
I mean, trade tensions and tariffs are currently adding an estimated $1.4 billion annually in costs to Apple's supply chain.
Which is huge.
Right. And to avoid that bleeding, Apple is aggressively accelerating a shift of iPhone production out of China and into India,
Yeah.
which is just an incredibly complex logistical nightmare in the short term.
And the cost of those tariffs, combined with general inflation, gets passed down to the consumer.
Always does.
Living expenses are rising, which creates a massive squeeze on disposable income. The average consumer is hesitating to finance a $1,200 premium device when their current 3-year-old phone sends text messages just fine. This raises an important question for you as the user. Are you actually buying a phone for the physical hardware anymore, or are you simply paying for an admission ticket to remain in a digital ecosystem?
That's a great way to phrase it.
Because your older iPhone is essentially just becoming a terminal, a gateway to access Apple's high-margin cloud services.
Right.
Apple's future profitability doesn't rely on convincing you that their new processor is faster. It relies entirely on your loyalty to their ecosystem. They need you locked into Apple Music, paying for that extra terabyte of iCloud storage, and swiping Apple Pay regardless of whether your phone is brand new or completely shattered.
Which kind of brings this entire conversation full circle.
It does.
We started by exploring how the AI revolution isn't this invisible, weightless software. It is a brutal physical war for chips, concrete, and electricity.
Yeah.
We have Apple scrambling for server space and secretly leaning on Google. We have Google rationing compute tokens from Meta and dropping servers in the desert with SpaceX. And we have the financial analysts deeply divided on whether Apple's strategy of ignoring the infrastructure race is brilliant restraint or a massive strategic failure.
And as we wrap up, I want to leave you with a final thought to consider regarding that physical infrastructure.
Let's hear it.
We've spent this entire deep dive looking at how these trillion-dollar companies are fighting tooth and nail just to run the AI we have today.
Right, the current stuff.
The chatbots that write emails or the generators that make images when you ask them to. But think about the roadmap for tomorrow.
Okay.
The industry is rapidly moving toward fully autonomous AI agents. These are software programs designed to run 204/7 in the background.
Oh, wow.
They will monitor your calendar, negotiate your utility bills, book your flights, and automatically reply to routine messages, all without you ever clicking a button or typing a prompt.
Right.
When AI goes from answering a single question to continuously operating your digital life in the background, the demand for physical compute won't just double. It will multiply exponentially.
Because it never sleeps. It's constantly pinging the server.
Precisely. If the biggest, wealthiest tech giants in the world are already rationing compute power and capping usage in 2026, what happens in a few years when your personal AI agent gets put on a wait list because there simply isn't enough electricity and silicon left on the planet to process your request?
Wow. That magical cloud isn't just hitting a brick wall, it might be running out of bricks entirely. Thank you so much for joining us on this deep dive. Keep questioning the physical realities behind the tech you use every day, and we'll catch you next time.